Alright guys, I'm back with another video. So this one is going to be a pre-recorded one, and I like to react to this particular video here. GameStop changed everything. Now this gentleman has been talking about GameStop. So far, from what I see so far, it's very negative, but we'll see though. But I also remember that he did a video about AMC as well right here, and of course, you know, trying to pump AMC and all that stuff. So but before I go any further though, I like to thank everybody for like, subscribe, and you know, commenting on my live streams, you know, and promoting my my channel to Moran's live stream as well. So that was fun to listen to, and you know who you are. I always appreciate that you do that. But you know, really this channel is for my own personal growth in terms of like public speaking and all that stuff. I've talked about that before. It's really helped me kind of bring my thoughts out, you know, verbally, right? And communication is pretty important when it comes to you know, portraying your thoughts and opinions and all that stuff. So that's what I'm trying to grow as a person in my personal life here and there. But it just so happened that I love to talk about stock. I love to talk about GME and the media and you know, the people that are pumping, you know, certain stock into your psyche, and then try to tell you, hey, GameStop is terrible and all that stuff, right? Because like I've noticed all of that. You know, Yahoo Finance is notorious for that one. We saw what Morantz was pointed out before, that Yahoo Finance has their you know, news feed about AMC, but yet, you know, show GME on the on the news feed there, right? I'm trying to okay, China sell off new gaming restriction and all that stuff. Okay, so I haven't seen that one, but you know, if I have some time, I will go through all that. But yeah, so let's go through what I'm gonna kind of show you here. Now, I realized that this video right here was made during the whole split thing. I think this has already happened. The dilutions and all that stuff, reverse stock split. Therefore, you see right here, right in front of you, this gentleman, of course, he doubled down on, see, like if you read the title of this video right here, stock to double if one of these four things happened, right? Now, I'm not going to go through all in this video because it's already 3 months old. He might have a newly updated one that, you know, kind of, I don't know, like explain why this didn't happen and all that stuff, right? But we all know is what happened here. I think to one of the point that I want to point out here, just in case somebody who watch AMC and want to get into it, AMC doesn't realize is that this is already been diluted to the till, right? And if you look at the price target right here, at a first glance, you might think that, oh my God, they have updated, you know, from $2 to now $19. So this is a very a good time to buy into it, because you know, all the analysts out there, they switch their flip their script, so to speak, right? And that's not completely true, because you know, this price target has already been, you know, set in stone already. It's just that because of the reverse stock split, it makes it seems like it's higher than it's previously, you know, the analysts out there previously give the price target to, right? And so just so you know too, $19 is $1.90 before the split. Okay, so the people that bought before the split is going to experience the downturn here. So of course, back then it was $19, right? I don't remember. Hold on, let me see if I show it here. give me a minute here. I'm trying to see if he showed the price for AMC there. It doesn't. It does not show that. But yeah, so he bought into it initially. If you were to look at his, let me see, 10 stock to squeeze. Right here, I invested close to $40,000 of his money before that, right? And of course, this is why he make a video for you to jump in as well. Now, I'm not saying, of course, like, if you buy into a certain stock, you believe in it, and in the long term, you tend to make videos so that you could kind of spread the knowledge that you have about that set stock, right? Nothing wrong with that, but I think it's kind of misleading, and it's curious to me too that it happens after the reverse stock split. It's almost like they're trying to pull in more people into it. Again, is it orchestrated? I don't know. It's hard to tell that these people are paid to do this. I hate to think that that's the default thinking when it comes to these things, but I can't help but believe that, right? Because again, it's just so ridiculous sometimes, that these type of people are promoting it like, oh, all of a sudden AMC is a good buy. Like, but I'll link down below so you could check his channel out. Of course, he has so many subscribers already. I'm technically cloud chasing if I'm going after him in that way. Now, enough about AMC though. We all know what AMC is doing, of course, with that $40,000 investment at the time. I bet you anything he's probably down a lot now. But if you believe in what he's saying in that video, he's gonna hold it for a long term and hope that it will bounce back, right? So that's that. But he did make a new video here about GameStop. I have not seen this in an entirety, but from the snippet that I've seen so far, it seems like he's very negative about GameStop. So it's going to be fun for me to interact with this or react to this video. I'll stop, in the middle to ever so often to react to his comment here. So let's go and let's listen in.
Interest rate. Back to our main topic though, and I know this is something a lot of investors out there are not going to want to listen to, but GameStop, the retailer, is dead. GameStop, the investment company, is.
So he's saying that GameStop, the retailer, is dead. That is so untrue. Like, man, like these people. So let's go through it. How can he say that with certainty that it's dead, right? Now, of course, I'm sure he's probably just looking at the top line revenue, right? It's almost, it's akin to, people who are only thinking about how much money comes in and not take into account how much money goes out, right? They only care, okay, how much money can I bring in? But not really looking into, okay, how much can I cut? Because the more I bring in, the more money I spend. It makes no sense because it really doesn't matter how much you make. It's how much you get to keep at the end of the day. That's what's most important, right? So when he say that, oh, GameStop as a retailer is dead, I'm sure he's probably thinking about the top line revenue here. Yes, for this quarter, we did miss the top line revenue by $100 million, but look at this. We do have better profit margin in terms of how much we get to keep at the end of the day. The fact that we are able to, lower the expenses, operating margin right here, operating expenses down, a lot from last quarter. That is the testament of what Ryan Cohen as a leadership of this company is able to achieve, and to kind of write that off as oh, he hasn't done anything yet, but we'll see how he said it earlier. But yeah, so I don't know how people could say that with a straight face, that it's dead and all that stuff. Of course, he has more reach. He has more influence than me. More people are going to want to tend to believe him more. But I doubt that he will show you the balance sheet here. But we'll see. Again, the video is still early. So let's listen in more.
All that is left, but there could still be some upside potential in this and ways to play the stock. For those of you following GME GameStop, I wanted to detail how management killed the retail business just last month, why this is going to be a totally different company going forward, and how to invest. If you didn't see that news, the board of directors put the final nail in the coffin to GameStop's retail business just last month when it announced its third quarter results. During the quarter, the company reported revenue fell 9% from the year ago period and is down 6% so far just this year. Now, management has had some success in cutting costs, increasing the gross margin to 26% and then cutting some of those operational expenses by
The nail in the coffin? What? This guy is like, I feel like it's scripted, right? I mean, it feels scripted to me.
23%, which did lead to a less of a loss of $3.1 million for the quarter, a huge improvement.
I mean, look at it, like some success, the way that he speak. Okay, so this down 10%, okay? Nail in the coffin, okay? And then over here, now management has some success in cutting costs, right? But look, okay, let's listen in one more time. Now he speak pretty fast, so let's slow him down a little bit, because I want you to kind of realize that these type of people, they're scripting it. Number one. Number two, they're good at it. They're good at, kind of drive their point home, saying that certain things is like this and that, right? So let's listen in one more time.
Results. During the quarter, the company reported revenue fell 9% from the year ago period and is down 6% so far just this year. Now, management has had some success in cutting costs, increasing the gross margin to 26% and then cutting some of those operational expenses by 23%, which did lead to a less of a loss of $3.1 million for the quarter, a huge improvement. But the company still has lost over $56 million just so far this year. And
see, this is so misleading, right? Like, just so far this year. Not say, okay, oof, sorry. A very, fire up here, because again, like this is the type of script that I despise so much, because again, knowing full well, maybe he doesn't. Hey, bow-tie nation person, maybe you don't know this, that the last quarter of this company is actually the most that they, like 40 or 30% of their sale happening in quarter four. Okay, they do max. Like, if you don't want to believe me, here, let me show you. Okay. So this is the third quarter. That's the quarter that you're showing your audience right there. This is the fourth quarter. See that fourth quarter? Look at that. Okay. $2.2 billion. Now you might say, it's going to be coming down because of, the nail in the coffin type of comment that you're telling your audience here. You see that? You see this? So the last four quarter is going to make this number looks like a peanuts. But the script that you are telling your audience is that, look, they're still losing tons of money in the 9 month, the last 9 months, and therefore they're dead as a company. Not really. If you evaluate a business based on a 9-month period, what are you doing? What are you doing this? Shouldn't you be doing a yearly basis? How about do a yearly basis? Here, if you watch this person here, please look at this for me real quick, okay? So this is AMC, okay? This is AMC. Sorry. Let's go to GME real quick. If you do the last in 12 months, okay, in 12 months, instead of the 9 month, there's a reason why you use the 9 months, sir, okay? Why don't you use a 12 month? I know why. Because it shows much more of a loss than a 12-month, right? I mean, don't BS your audience here. You have a responsibility, sir, to man. I don't want to attack you, but it's just so frustrating. Okay, so if you watch this particular gentleman, and if you're watching, I'm sure you won't, because again, I only have 100 subscribers, so that's ridiculous in and of itself. But off chance that some people who love this person didn't see how manipulative that was, right? To only use the 9-month versus the 12-month. So this is the 12-month. So in 12-month time frame, right? GME actually lose only $8 million. Okay? So instead of the 9-month number that you're using, see, this is why you use it, because it shows much more of a loss. So, okay, let me continue.
Operational expenses by 23%, which did lead to a less of a loss of $3.1 million for the quarter. A huge improvement, but the company still has lost over $56 million just so far this year. And looking out at this business over the longer term, revenue has now fallen in 6 of the last 8 years, and the company has not made a profit since 2018.
That might be true, but it's going to be fixed soon, okay? And again, like, why are you going to past 8 years or 5 years or whatever? Ryan Cohen just got in here. Like, again, new management, new everything. So of course, they're turning the ship around much more successful than you think they are. Again, 3 years. That's all you're giving some people to turn this around. I mean, come on. It's ridiculous. So let's
The gross margin profitability after paying its suppliers is now at a 5-year average. So any further improvement in income increases is going to be more difficult just on the back of those profitability measures. Other cost cutting is also running out here. The amount spent on those operational expenses, so selling, general, administrative, is now at 28% of sales, which is also at that 5-year average. Now, GameStop had managed to cut its expenses to just 23% of sales back a few years ago, but going forward, it is going to take much deeper cuts to eke out any more profitability from this. And
that is not true, by the way, because they could ramp up the revenue year on year, and the fact that they don't have any debt. I mean, come on. Like, it's very misleading, sir. The way that you're presenting your data and versus the way that you presented your AMC data, it seems skewed to me, sir. I just think that you're so manipulative in that sense. You might not, but you might try to steer people away from GameStop because you want to save them or something, right? I get it, that sentiment, sure, but come on, present the data a little bit more fair, in my opinion. But again, I'm biased, I get it. I bought GameStop, I own GameStop, I believe in this company. I believe that the leadership will do the best that they can. But come on, cut them some slack here, right?
that's going to come at the expense of sales growth or sink the company even further into decreasing sales. So it's kind of a no-win situation. It can cut costs even more, but it's going to have a very hard time growing that retail business if it does, and it's just going to lose more and more revenue each year.
That's not true, by the way. Like, if you could cut costs to the point where you will be able to increase the revenue, like, again, you don't cut costs to the point where you can't grow. You cut costs to the point where you could scale easily, much more palatable, much more, so to speak, like you want to grow when it makes sense to grow. Okay, you don't just grow, the revenue by $100 million, but only get to keep $10 million. That makes no sense, because then you use $90 million worth of costs. And it's like you overextend yourself to keep $10 million in growth profit margin. That makes no sense, sir. You know, and the fact that you kind of like preface it by saying that they're going to continue to cut until they can't cut anymore. You know, what? No. Eventually, they're going to stop cutting and focusing on growing the top line revenue. Right now, it just doesn't make any sense because every retailer are struggling, sir. And it's almost like you think it's only GameStop is struggling here. Come on, look at the world around you, and to say that is like, oh, it's just the GameStop problem here. It's so misleading.
This is a company that may never be profitable. And where this all comes to a head is in its cash flow. That income statement can show a fudged picture of finances because it's all those accounts.
Huh? May never become profitable? Well, that's your opinion, it seems like. It's not based on facts. Yeah? This guy. Okay, let's see. You know, the fact that they're saying like it may not ever be profitable, that is so untrue. So let me show you something here. Okay, so if you look at, hold on, right here, operated income, right? No, this is tax, sorry. I'm looking for net, you guys, net, right here. Net income, right? Okay. So, sorry. So right there. Okay, if you see the highlighted one, that's net income. So this is profitable. Right there, right? 21, profitable. This one, 20, profitable. Before that, profitable. Right there, you know? Yes, it's cyclical. Some years they lose more, but again, it's due to some other financial stuff, you know, the goodwill and all that stuff. And this is why you experience that $1 billion loss at random, you know. But you need to look at it closer than that, sir. I think you're just misleading your audience here to say that this company is done for. It's so, I don't know. It's misleading to say the least. But they do make money. Look, last year, $48 million right there, right? Yes, on the annual basis, it's losing $100 million right there. But now, because they've been cutting costs, they've been, you know, doing everything they can to make this company more easily scalable in the future, they have been, you know, make the difficult decision to string their top line revenue on purpose while focusing on, okay, what can we do to survive in this environment, right? Again, like I'm telling you, the world is struggling, and you speak it as if it's just GameStop problem here.
Accounting tricks, but it is the actual cash flow in and out of a company that shows its true survivability. And here, the picture is not good. So far this year, GameStop has bled $192 million from its core operating activities and has spent another $54 million reinvesting for growth. Since the company doesn't owe much debt, financing cash flow really hasn't been too bad here, with just an outflow of just $8 million. But all this adds up, and GameStop...
You don't even show that. An outflow of $8 million. That's really nothing, sir. What the hell?
GameStop hemorrhaged over $266 million in cash just in the first 9 months of this year. Now, like its net income loss, that is an improvement over last year's cash outflow of almost $500 million, but still over $250,000 of cash. Now, that is a problem, but if it weren't for what I'm going to talk about...
Oh, that's just a problem. They're able to improve $500 million. That's a problem? Like, what the heck?
Now, it would be survivable because the company still has $929 million in balance sheet cash reserves. It's cash set aside to handle this cash loss until the board of directors made a decision last month. That big news was that the board approved 2 changes, detailing them in its 10Q report. And I was really surprised it didn't have a press conference for these. This is something you definitely want to announce in a press conference.
He doesn't need to, okay? Because we, as an investor, we know his style of leadership. This is what we want. We want him to focus, okay, and not spend 10 minutes of his time doing this. Why would he waste time just to announce something like this? We could read it. We could read it right there. You could go there and read it for yourself. He doesn't have to spend time doing that.
I think the board is just trying to maybe put some success behind the changes first before it really comes out public with it. But first, that it would now be investing balance sheet cash into stocks and other investments. This is a giant change because traditionally those cash reserves are held for business needs. Folks, understand companies are miserly strict about what they do with this balance sheet cash because it needs to be there for operations when they need it. And this isn't money just sitting around, but cash the company is counting on to pay for those operational expenses, strategic investments when they come up, and just other cash flow needs, like the $266 million in cash that the company burned through over the last year. That's why it's almost always exclusively invested in treasuries, money market funds, or just short-term, very high-quality corporate bonds that have almost no risk of default. Okay, to now say that this cash is going to be used to invest in stocks, which could lose value very quickly or just be locked up to make that return, it's kind of like a blasphemy for most chief financial officers. Even more so.
Blasphemy? Really? Also, okay, you're saying that it could lose, but you don't even talk about what they could gain. It's like, really? Yes, they could lose, and so also they could gain as well. Now, I know, like, it's a risky thing. I get it. Maybe to you, it's probably like, oh, it's not as risky as AMC. Really? It's not as risky as AMC? Come on.
Surprising though, it seems that the board is giving CEO Ryan Cohen the checkbook and full control of this investing. The 10Q gives him authority and reads, with such assistance and committees, he may engage, but critically does not say that he has to consult anyone on this. Now, this is where investor perspective is going to differ on whether to invest in shares of GameStop after these changes. To be honest, I gotta agree with Wedbush analyst Michael Proctor.
Oh, of course you would agree with him. Come on. Are you like, got paid for doing this? Come on. It's like, of course, it's the only analyst out there that is willing to, give GameStop a fair shake of things, right? We all know what Wedbush is, and the fact that you only use Wedbush analysts here, it tells me everything to do with yourself, and this is why, you have a skewed belief that AMC is dead. GME is dead. GME is not going to ever post a profit. GME will have a hard time, growing the top line revenue when they cut costs so much so that the CEO doesn't even take any salary. You don't even want to tell your audience that, do you? Like, come on.
And calling this kind of an inane and alarming move for investors, because to potentially not have that cash available for the company when it is burning through $300 million a year, unless Cohen...
That's so untrue. They're not burning that much a year anymore. It used to. Like, what are you talking about, sir? What is this number? Is this $300 million? Huh? It's like, and then on top of that, didn't you say previously they were cutting costs? To the point where the profit margin is 27%? That's not to be taken account towards the next year and the year after that? So what are you talking about? $300 million cash burn? That is misleading, you, sir.
And can turn these into fast profits, basically turns GameStop into a hedge fund. Now, if your view is that Cohen can...
Yeah, hedge fund. So is that enough for you to say that they're a good company or good whatever leadership? No?
Invest this cash for outsized returns, then maybe it's still a good bet. With sales expected further down by 5% next year and GAAP losses of at least $20 million, he's going to have to make a very solid return on a few $100 million that he can safely invest. Now, Cohen...
But here's the thing too. I forgot to bring this point out. Remember when he said there is no point of that GameStop will ever post a positive return, like profitability? Well, Wall Street actually disagree with you, sir. You know why? Here, let me show you something here. not that one. Statistic earnings. I think this is the one. Okay, this is Wall Street forecast. Okay, so let's look at annual, because annual is a little bit more kind of like towards, you know, the whole year and not just 9 months of operation. I mean, I feel like 12 months of data is better than 9 months of data. Wouldn't you agree with me, sir? Okay, let's look at this real quick. I'm sorry, I am sounding a little bit condescending, but it's very frustrating to me that this person that have a large platform, large following, leading people into this mistakable, you know, like a mistake of analyzing the company, right? And again, hey, I am biased because I own this stock, okay? But let's look at the data that is presented to you right here. So this is a forecast, okay, for the next year. They're actually estimating that GameStop is going to earn 11 cents, okay? Meaning like on the positive. So that's good, right? The fact that you say, oh, they're never going to post a profitable year, that is like, I would say a little bit hyperbole, right? You hyped it out so that to say that GameStop is dead. You know, GameStop is, you know, based on who? Wetbush, really? Come on. So look at this. So estimation right there, 11, right? And then if you look at, if you look at a different right here, right there. So that's for a fiscal year of 2023, right? 2024, look at the estimate earnings, 14 cents. What does that say to you? What does that say to you? It means that they're going to be profitable. Even Wall Street or the forecaster, whoever make this estimate, you know, earnings right here, forecast, disagree with you. They will post profit throughout the next few years or so, okay? At least the next 3 years, they're going to post profit. And then this is a revenue, okay? So even Wall Street, you know, kind of estimate that GameStop's going to do $2.07 billion for the next quarter. So is that nothing at all? Is $2 billion is a like too high for you or something? Or too low for you, I'm sorry. To say that this company don't make any money. See, like they forecasting that they will do some sale here. So again, like to say that, oh, they're never going to be profitable, blah, 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 whatever. So, hey.
Did co-found pet retailer Chewy in 2011 to become a billionaire when it was issued shares in 2019. He made his first investment in GameStop in 2020 and has become an activist investor, buying large chunks of companies to force a management change. For example, he started accumulating shares of Bed Bath & Beyond in March of last year, but then selling out in August before the company went bankrupt. He also...
Of course, they're going to bring Bed Bath & Beyond. That has nothing to do with, you know, Ryan Cohen. We all know the story of Bed Bath & Beyond here. For those of you who doesn't, please go do your own research. Go watch Moran's Rants too. And, you know, go do your own research, because this is ridiculous to say that this is somehow a reflection of Ryan Cohen trying to pump and dump and all that stuff. If you understand how this guy has become, you know, you know, people that we looked up to, I look up to, you better look into the story based on what has happened and not how the media is portraying him to be.
Also built a big stake in retailer Nordstrom, but there's really nothing here in his track record of returns that gives me any kind of confidence that he can manage GameStop's investments. Now with most hedge...
You see, like he's putting this doubt into you to say that the Ryan Cohen is not a good CEO. There's no track record of his success and all that stuff. Well, you could disagree, you know, but go look into his video. do your own research on what Ryan Cohen really is, how he's conducting his the mannerism, the work ethic that he has. Do your own research, please, because this guy obviously don't see his Ryan Cohen's value, and bringing all of the Bed Bath and Beyond, Nordstrom and all that stuff, those are headlines, okay? So they're headlines to portray something to you about somebody, and they do this pretty well. He's scripted, he's going on a script right now in front of you.
Hedge funds typically charging a 2 and 20 fee structure, so 2% fee and 20% of the profits, then maybe GameStop as a Cohen-led hedge fund isn't a bad deal. You're basically getting a hedge fund returns without the oversized fees that they usually charge. If he can produce those outsized returns on that cash to plug that operational hole, then maybe it could surprise investors to the upside. As the shares have been able to do over the last 2 years, though, it is very risky on this. Now I want to look at some of the stocks I'm following this week. First, we got FedEx Corporation.
Of course. He pumped by the stock. Sure.
It's going to be reporting its earnings on Tuesday, with shares up 64% already over the last year against revenue that it really is expected flat over the period. Cost cutting is expected to drive a 22% improvement in earnings, so about $18.24 a share on the year, but shares are still trading relatively expensive here at 15.4 times on that price to earnings basis. That is well over the historical average. We can see here in the statistics the averages for those price multiples here. We see trailing PE right now, trailing PE at 17 times. You can see that is very well over even this 13 times PE here it was at last year, so relatively expensive. It seems the market is fully pricing in kind of a soft landing for the economy here, folks. While November
soft landing, right? That term is overused and all that stuff, and that usually means like, hey, there's some downturn, serious downturns coming. Yeah, it's ridiculous.
Sales reported Friday were higher than expected. The stock is fairly priced at best, and I think with limited upside potential. Now, I'd probably avoid the stock at this point, but Tuesday's report is still going to be important for what management sees in consumer strength going forward. Also going to be watching Carnival Corporation.
It's like he's doing GameStop video, and he promoting other stocks along with it, saying, if you want to buy into GameStop, buy into these type of stocks. So of course, like nothing to do with GameStop price point, saying that GameStop is actually risky, but then promoting other stocks alongside it, right? Now, again, he is a financial guy, I get it, but from what I see so far, very one-sided. I know, hey, if you're presenting your data here and there, but right off the bat, I know that it's being skewed to one side already, just by the fact that they're intentionally using the 9 month, the last 9 months versus the whole year, right? To, again, misleading people into thinking that this company is done for, right? All right, guys, that's all I have for this one. I hope you have a Merry Christmas. Okay.